Welcome back, everybody. Sive is here with the forexpeacearmy.com. Let's have a look on the euro currency again. So as usual, we prepared a report today, and actually, since we've got a lot of statistics finally, so not everything stands around only the geopolitical news, some around the conflict in Iran. So we've got a lot of data from Europe, particularly gross domestic product, sentiment, inflation, same in the United States, and some another data that has not been widely announced, but it has really very special meaning for our understanding of the current situation. And that led us to make some interesting conclusions. So different for longer term, different for shorter term perspective. So if you would like to know about this or just read the report, I will put link down below the video as usual. Returning back to the short-term perspective on the technical trading, next week, as usual, let's see what the plan we could create for starting of the week. So first of all, on the daily chart, you could see that in general our plan worked nice. So once the reversal bar is appeared on Thursday, we said we expect upward continuation based on intraday shapes, based on the reversal pattern itself. But if you remember, we have expected a bit shallower continuation, not as strong as here. But anyway, even with this spike up, you could see that we've got the nicely looking shooting star pattern here. And actually, overall context remains bearish, so we do not have any breaking of the trend. It means that since this overall picture stands in a row with the weekly grabber as well, our context remains bearish. At the same time, here is some a bit complexity stands around, some nuance around this thing. If you take a look on the dollar index, you will see that last week dollar also has created the grabber, which is opposed to the one that we have already. So in fact, on the dollar, you could see the two grabbers standing in the opposite directions. It means that overall context here remains tricky and market stands mostly in decision, which also means that here we have to be really selective and very sensitive to any signs that we will see, just not blindly follow the pattern that we have on the weekly, because our situation is very fragile. It could change in any moment, and we have to control some points. Now we will discuss which one to get the early understanding of what is going on. So now let's turn to the 4-hour time frame chart. Here you could see what has happened. Market has moved not only to the 1745, 1750 area that we talked about, but it also jumped right to the 1775, which we talked about also, but it was our next target, potentially 618 level. And you can see the market here is forming some kind of the widening triangle. If you combine it together with the shape of the hand and shoulders, you understand that appearing of the widening triangle on the last part and as an arm of the hand and shoulders, it's absolutely not bearish stuff. So it mostly has the bullish feature rather than bearish. That's what makes me actually be really careful around current existing bearish setup on the daily and weekly chart, because I'm not excluding the situation where we could get the early signs of the failure and early bullish signs on the 4-hour time frame chart and on the hourly chart. But this is only half of the story. So if you now take a look inside of this, you could see that potentially it might be a hand shoulders pattern with the right arm bottom around approximately somewhere 117 area, something like this. Especially because here, if you remember, we've got the butterfly. Butterfly very often becomes the part of the hand and shoulders. So correspondingly, it makes some structure of our plan. First of all, we suggest that market probably, based on this performance that we've got on Friday, should keep going lower and reach the 117. And then most interesting things will start. So if we will see that market is just breaking it down, erasing this potential pattern, moving down to this area 1650, retesting it, it means that the bearish context is okay. So it means that market just will try and challenge this support area and trying to break it down, and still will trying to keep falling to the downside. If we will see that the market suddenly stopped and not reached back to the 1650, but stopped around 1675 170 area. It means that chances on a possible reversing overall situation in a bullish mode extremely rising, significantly rising. So it means that around 1675, 170 area, it might be a reversal to the upside. Correspondingly, if you would like to take the long position, this is the point that you have to keep an eye on. Not just buying around it, just because I said that it might be, but looking at longer time frames, 15-minute chart, 30-minute chart maybe, watching for patterns. If you'll see some bullish signs of the reversal around it, forming minor, small bullish patterns, it is possible to use it. Your stop will be just below this area, it's very close. It's not really big stop, but the result might be really great because market not just showing some upper direction, but it will take out of this stop, because it will mean that this potential pattern will fail and market just will keep going above the 118.50. On the hourly chart, what bears could do? If you take a look on the hourly chart, that's our shooting star pattern on the daily chart. Here's also we could get kind of the hand shoulders pattern that will lead market precisely to the 1675. Correspondingly, you could watch for minor bounce here. I suggest that it might be 50% because your currency likes 50%. It's not too small, it's not too big. Since we've gone here a reversal swing, you can see that the swing down is greater than previous swing up. It means that 50% is highly likely. In this case, just if you take a look at this potential ABCD down, you will see that if this hand shoulders will work, that will be approximately around 1680 area, exactly at the lows of the right arm on the 4-day chart. So correspondingly, if you have the bearish, you would like to take the short position, you could consider this setup with the pullback 1750 and a possible minimum target around 117. Let's take the conservative target. But in general, it will be around 1675, 17 even. If you have a bullish view, probably here you should do nothing, just wait when the market will reach it and then makes the decision around this area. But also you could control how these hand shoulders will perform. For instance, if you will see that market is not stopping here, start to keep going higher, it means that we will not get everything, all this stuff, but we just keep going higher. This scenario I would consider as less probable, but we do not know what the news background will be. So something could change, for example. That's in general the plan that we're taking for the starting of the week, and just let's see what will happen.